We're so glad to offer this webinar this morning to provide some information on the Justice Forward Fund. Dan, you want to click us through? There we go. We're hoping today that we will just get out some information about what is the Justice Forward Fund. We'll talk a little bit about who can apply for a loan, what the terms of a loan might be, what a loan could be used for or not used for. And then we'll do a look at the loan application itself and review the financial projection or an example of a financial projection template that people can use as one of the requirements for the loan. And we'll talk about what we all at the Vermont Community Loan Fund look at when we are making loan decisions. And then we will stop recording the webinar and we will answer questions. And you can use the Q&A portion of the Teams meeting to ask questions at that time, or you can also we'll unmute people and have a conversation then. So this is what we're hoping to do today. So just a little bit about the Vermont Community Loan Fund and who we are in general, because not everybody knows. So our mission is really to invest in people and communities to create a just and thriving Vermont. And we do that by making loans to small businesses, community organizations, and nonprofits in Vermont. And in general, we're making loans to those organizations that can't otherwise access the money that they need, and through like a bank or another financial institution. So we're what's called an alternative community-based lender. We have a lot of different loan products at the Vermont Community Loan Fund, and we will post these slides on our website as well as a link to the recording. And some of those loan products are specialty loan products around food, farm, and forest businesses, agritourism, so a lot in that working land space. We finance and provide loans for childcare, affordable housing, as well as outdoor recreation. Today, we're going to focus specifically on the Justice Forward Fund, but that doesn't mean that one of our other loan products might be a great fit for you. And we would encourage you to just talk with us about your idea. And in general, our loan products require collateral. In other words, something that you can use to secure the loan. They require a mission fit. We look at the cash flow, like how will the loan be paid back, and can the operating entity afford to pay the loan back? And in general, we're requiring a business plan as well. So when I say that in general, because Dan's going to talk specifically about the Justice Forward Fund and what the requirements are for that loan product. We've tried to make it a more accessible loan product. So I think I'm handing it over to you now, Dan.
All right, thank you. So why did we create a Justice Forward Fund? And so essentially there's persistent racial wealth gap in the United States, and we looked at our own portfolio of business loans we had done. We were underinvested in communities of color, and so we raised funds and piloted a special purpose credit program targeted to BIPOC Vermonters. It's a low-cost loan product, kind of intended to be the first access to debt capital to help a business generate wealth. In terms of the Justice Forward Fund itself, it's a loan for Vermont businesses and nonprofit organizations. Loans can be used for equipment, vehicles, inventories, whether that's ingredients or raw materials or whatever else takes the form of inventory for a business. There's no real restriction on what type of business by an industry we look at necessarily. Loans can be used for building construction or improvement, for working capital, payroll, and other operational needs. And just the most important thing is that the loan funds are used by a business to help the business organization increase sales, reduce costs, or both. And more specific information about the Justice Forward Fund, this is what's called a special purpose credit program. This is a federal designation, and it's usable by Vermonters who are Black, Hispanic, Indigenous, or other persons of color. It can be a small business, including a sole proprietorship. We don't necessarily have concerns about whatever corporate structure. You're using that as best for your own needs. It could be a cooperative, but just the majority of owners, 50% or more, we would want to be people of color for it to be eligible to use this program. And nonprofits we can lend to as well with this program, and we would just want to make sure that it was a nonprofit that was a majority of members and staff and key leadership roles that were persons of color. In terms of applying, we have translation and interpretation services are available at no cost to the applicant, and we have a glossary and frequently asked questions on our website in several languages. In terms of the loan, it has a 2% interest rate. We can do as small as 1,000 with the program and as large as 50,000. We can do a max length of term of 7 years or 84 months. The only cost to the applicant is a $60 application fee. We do not charge closing or origination fees for this program. There is not a collateral requirement. You don't have to have a certain amount of collateral or assets to pledge, but we would secure on whatever business assets are there. As part of the application, we do what's called a hard pull in the credit history, where we pull a full report, and we would look not necessarily at the credit score, but at the credit story. There's no strict credit score requirements to this program, just to the situation. If there are adverse events in the credit history, we would want to talk through that with you and understand what had happened. And we would require a personal guarantee for anyone owning 20% or more of a business. And we do report to credit bureaus the business loan is being personally guaranteed. And what we found, at least in the first round of the program, was this was very helpful to help people begin to build credit who might not have had access to it before. So our application is only 3 pages. About to go over an example application here in a moment. And it contains such thing as a loan request and proposed use of funds, a business description or business plan, whatever you have. We don't require you to provide a multi-page business plan for this program, just a general description of what you're trying to do. Then we ask for any professional you have. We do ask that we have historical financials and a 12-month projected profit and loss or cash flow statement, and just to help us understand what your business is trying to go, or what your organization is trying to achieve with the loan funds. And we have advisory available at no cost to applicants to help prepare such projections, but there's also many other organizations out there offering business advisory support. And I won't start naming them so I don't leave anyone out, but we've provided lists of those entities before, and we're happy to do so again. And we ask that anyone who owns 20% of the more business complete personal financial statement. So I'm just going to actually show an example to try to make this a bit more tangible as to what we're talking about. So I'm going to have to stop the share on this and start the share elsewhere. So I'll be doing that right now just to show an example application. So, yep. All right. That appeared to have worked. Great. And so this is our Justice Forward Fund application. I just made an example business here, but this kind of asks for the same things I was just talking about here. And there's little check boxes for them just to help people organize themselves. That's the page you'd sign. And here's kind of some of the information we're looking for in this application. I just want to know where it's located, how to contact you, what kind of corporate structure, your legal structure you have, but just for our understanding, when a business was established, and what type of business it is. A NACI's code, if you click that link, it takes you to a website. It's a searchable code based on industry. Every industry has a code pretty much, but if there's any questions about how to complete things like that in the application, we're always happy to help. It talks about, we ask for the number of employees. If you're keeping your financial records, we'd like to know how you're doing that. If you have a business advisor, ask you to let us know. And if you are interested and you're not currently working with one, we can certainly, whether it's us or someone else, try to help you find one. Some questions about your business status, information about owners, and just contact information there. Information about the loan amounts. This is actually a key thing I want to talk about here. And the example I gave, just to give an example, I just said it was loan funds used to buy inventory, but there's quite a few other things loan funds could be used for. And we just ask that people, best you can, provide an explanation as to what the loan funds are going to be spent on with a breakdown, because the more specific that is, often we find the more successful a business is. If you're able to make a contribution of your own, well, we ask you listed here. And so we're talking about business description. Here's just a paragraph. Like, we understand, writing out a full multi-page business plan might not be in everyone's skill set or something they're used to doing, but just to describe some basic information about the business is very helpful. Then any references, we ask for any professional references there. And then we just have an impact survey, and we don't have any influence on the loan outcome with that. But as a mission-based organization, we do want to make sure we're holding ourselves accountable to the community we're trying to serve, and we're collecting that information. Like I said, the only cost is a fee of $60, and there are several ways to capture that. I'm going to quickly turn and go over an example personal financial statement just to show you what that could look like to complete it. And in this case, basically what we're just looking for is your personal assets, whether that's cash you have, whether it's stocks and bonds, real estate, automobiles, other personal property. Just list all those assets out there, provide a description if it's possible. And then any debts you have, whether it be credit cards, student loans, auto loans, mortgage, just provide that information. And then any sources of income outside the business or in the business, provide that information there. If there's any other loans you're a guarantor on, that's often what happens in that thing, just to provide us with that information. And then just any debt you have to get a little more specific, like if you have an auto loan, who is it owed to, what interest rate is it at, all these things, just to help us understand where people are coming from and what their specific situation is. As I mentioned, we have a glossary of some of these common terms. It's available in several languages on our website, and people can download that if they want. Then we have some frequently asked questions as well available. And then the last thing I'm going to share is just a example financial projection, because we often talk about our financial projection, but we don't always, I think, explain what we're looking for. So I'm going to share an example of what that looks like here as well, just for everyone's benefit. So if this came through all right, and there's several different templates for these, and several different entities use it, like whether it's Vermont Small Business Development Center, Champlain Valley Score, Vermont Professionals Color Network, or many other entities can share a template, or that are working as advisors can share a template for how to prepare this information. But this is just an example here, and of what a financial projection could look like. And here you can see I put a historical year for 2025 in this example of a pet food company, and then I provide a projection. Essentially, it's just listing the revenues, any notes on the revenues that you want to provide, more information about the business, the costs of goods sold for the raw materials, any other expenses, whether it's wages, advertising, marketing, rent, insurance, all those things, and can kind of any owner's draw that's planned, or any debt that's already existing, or projected, put in the debt service. And we're always happy to answer more questions about how to make a projection, and either direct you to other resources that can help you prepare it, or help you do it ourselves. So the last thing I have is to go back to the presentation, a few more slides, and we'll open up for questions. All right. So we did that. So underwriting, we just wanted to, for transparency, go over some of the key factors, frankly, us or any creditor looks at, and they may use different terms for it than we do, and place different emphasis on different ones. But we aim to be flexible and try to operate so much without strict requirements, while still recognizing certain things are important in a business organization to be successful. And so some of these key factors are business strategy. That would just be simply the business strategy is reasonable and achievable. There's a market for the product or service, and there's a plan to meet revenue goals while containing costs. Team capacity, this is key team members, whether it's board, owners, staff, consultants, have the skill set, knowledge, and adaptability and experience that indicates that they can be successful. There is a specific emphasis on industry and managerial experience in that, whatever the specific industry the business is in. Loan benefit, so the proposed use of funds will have a tangible benefit to the profitability or sustainability of the organization. or the business. So in the example I gave where it was loan funds to buy inventory, obviously the idea is that the inventory is going to be turned into sales and revenue that helps the company grow. So other key factors are other sources of funding. Is there any other sources of funding for the project besides VCLF? That could be sweat equity from the owner. That could be owner contributions, crowdfunding, grants, other loans, just other people funding the project to increase its chances of success. Credit history. The business owner's personal credit history demonstrates an ability to pay prior debt obligations. Certain types of debt, like medical debt in particular, and also student debt, won't weigh as heavily as other like secured debt, like an auto loan or something. Just in our experience, medical debt in particular doesn't have as much relevance with whether someone can run a business successfully. Yeah. Last key factors are financial capacity of the applicant. So that's either their personal financial situation or past income indicates there's an alternative path to repayment if the business is not successful. So looking at existing debt and comparing it to income. And collateral, there is collateral assets available to pledge on a loan if the business is not successful. And I'll say for these last two I've just mentioned, for the Justice Forward Fund in particular, we recognize that as this is a special purpose credit program, we're often working with individuals who may not have a great deal of assets of their own or financial capacity of their own, but you may have the skill set to run a business successfully. And so those things we're going to give a bit more weight to, as opposed to some of the more factors that this is, I think, collateral and financial capacity of the applicant are factors a more traditional lender might look on a bit more heavily. Last one's loan repayment. And so financial projections and or historical results indicate a business's ability to pay operating expenses, make loan payments, and if applicable, allow for an owner's draw. Where that wouldn't be applicable is like maybe a nonprofit or something. But in general, we want people to be building wealth and making owner's draws from their business and have the businesses be successful. So, and here's our contact information if you want to reach out. And we aim to have decisions within 4 to 6 weeks. And while this is an alternative loan product, sometimes we do have to say no, but we'll always try to be transparent as to when that happened and why. But I think our goal overall is to try to give people an opportunity to fund their business and be successful.